Good morning, you're watching Businessworld Live. I'm Danie Laurel, and here are the biggest stories to kickstart this trading day Friday. Now, despite lingering inflationary pressures, the Bangko Sentral says stagflation is not an immediate risk to the economy. The Trade Department assures the public that the prices of basic commodities will remain stable in the next few months. Now, while tourism share to the economy has improved, travelers fear of higher airfares as airlines are also feeling the pinch of the soaring fuel prices. And local shares managed to rebound on Thursday's trade, but the index still closed below 6,400. We'll also ask the Bourse's president himself, Ramon Monzon, about the PSE's decision to shift to floorless trading. We begin our broadcast with the Bangko Sentral assuring the public that stagflation is unlikely to pose an immediate risk to the domestic economy. Now, despite the rising commodity prices and lingering external risks, Bangko Sentral Governor Ben Diokno is optimistic that growth will be sustained. That's after the economy expanded by a better-than-expected pace of 8.3% in the first quarter. Stagflation is a condition where inflation persists, unemployment is high, and economic output is low. Diokno says the steady rise in credit activity, improved job market, and higher foreign direct investments will help boost the economy's ongoing recovery from the pandemic. However, the country dealing with a high inflation rate, with the latest reading coming in at 5.4% in May, that is the highest in more than 3.5 years. Diokno says the BSP will remain vigilant over emerging price conditions. But how will the Bangko Sentral tackle the rising inflation at its meeting next week? Now, former BSP Deputy Governor Diwa Ginigundo says the Fed's aggressive tightening puts more pressure on the BSP to consider a bigger rate hike. This echoes BPI's expectations that the BSP may hike rates by 50 basis points in response to the Fed's 75 basis point interest rate hike. BPI explains the peso is at risk of succumbing to external stress if the BSP pushes through with its initial plan of raising its policy rate by just 25 bips. Incoming BSP Governor Felipe Medalla earlier told Businessworld that the central bank is poised to raise the key interest rates gradually with 25 basis points for each of their next two meetings. Medalla has also said that he does not personally prefer a rate hike that's higher than 25 basis points. Now, it's been a tough week to say the least. We saw Monday's global equities slump and then just some flickers of bargain hunting throughout the week after we saw a recovery in Wall Street. Now, Asia is back on shaky ground after a sell-off overnight in the U.S. and global stocks are now headed for their worst week since the pandemic in 2020. Just a quick peek here, the S&P 500 down by 3 3/10% here. And over in Asia Pacific, you can see the same red tide going on. It just seems to be the theme of the week. And if you take a look at our own domestic front, it doesn't seem to show any signs of letting up. 6,200 levels this morning. Shocking even for me. We were hoping that the 6,400 level would bring in some bargain hunting, but we are now down by 1 7/10%. Properties feeling the pinch, down by 2%. Now, of course, this comes amid those comments of the Bangko Sentral, after some quelling here from the incoming BSP Governor Felipe Medalla that it might just be 25 basis points twice. There might now be a possibility of a 50 bips hike, and that is, of course, affecting the property space most of all. This also, however, might bode well for the foreign investors, keeping them from leaving. So we're going to have to see how that goes. But nevertheless, moving back to our bourse and seeing which are the biggest movers of the morning. Let's take a look at the first 6 minutes of trade. No one in the green so far. You've actually got Wilcon Depot, the worst performer, down by 4 7/10%, followed by GT Cap and ICTSI. And finally, just a quick peek at how our peso is reacting to a possible higher than expected rate hike by the Bangko Sentral. In fairness, it's actually strengthening a touch still, though, above the 53 levels, 53.44 to the greenback. This is still the weakest we've seen in 3 years. Now, apart from the endless issues out of our control, what can we focus on which are under our control? Here to give us some updates on the investor sentiment and how the bourse is changing with the times, we have with us Ramon Monzon, President of the Philippine Stock Exchange. Good morning, Sir Mon.
Good morning, Danie.
Sir, let's kick off with the now normal, closing down the trading floor, the beautiful trading floor that I've been able to visit a couple of times there over in BGC. What's the reason for this? Is this about cost savings? Is this about being able to increase participation for people, that prefer to do it virtually? And why now?
Okay. Well, just to give you a background, when we were moving to this building, the thought at that time really was not to have a trading floor anymore, because like all the other exchanges in our region, nobody has a trading floor anymore. Everybody does trading digitally or virtually, as they say. But again, the board was prevailed upon by some of the brokers to still have a trading floor. So when we started the trading floor, we had 85 of the 124 brokers applying for a booth. And these 85 brokers, I mean, they've been coming to the trading floor every day. But when the pandemic hit, and at the same time, the lease contract for the trading booths expired, only 29 of the 85 had renewed the leases. And of these 29, on a daily basis, an average of 8 to 10 trading participants only use the booths. So it's very clear that there is really no more need to have a trading floor. Trading can be done virtually from their own offices or even from their own homes. And this was proven when we had to close the trading floor on 1 day's notice during the pandemic in March 2020. And trading was very seamless. No problems encountered from a trading floor scenario to a floorless trading. So now with 8 to 10 people just reporting to the trading floor, we felt it was not really, not so much that we want to save on the cost, but it wasn't feasible anymore to maintain the trading floor just for 8 to 10 brokers. And so we made a decision, or the board made a decision, to close the trading floor, and this will be effective next Friday, June 24.
All right, so something that was in the plan, in the offing, that got accelerated in any way, sir. As you mentioned, the investor participation is not any different with this virtual trading. Let's move on, sir, to market outlook under the new administration. Have you spoken to BBM, to their team, and what are investors thinking about him now, especially policies related to capital markets?
Well, I have not spoken, obviously, to BBM. He's a very busy person at this time. I did meet the incoming speaker, Martin Romualdez, who's who's a very savvy, capital market, you might say, follower, if not practitioner. As you know, there are a few legislations that we wanted to push in the new administration. One of them is the refiling of the PIFITA law. This PIFITA law was passed by the House last year, but unfortunately got stalled in the Senate. Why is this PIFITA law important for the capital markets? Because under this law, stock transaction tax, from trading in the stock market, which is at 60 basis points, making the Philippine market the highest, I guess, friction cost market among all the other markets. There was a program to reduce this stock transaction tax from 60 basis points to 10 basis points over a period of 5 years, a reduction of 10 basis points every year. We were hoping, if you remember, the Create law, or the Create tax reform law, had also sought to reduce the corporate income tax from 30% to 25% at the rate of 1% a year until it got to 25% 5 years later. But lo and behold, to everybody's surprise and you might say delight, I mean, our, I guess, legislators saw fit to reduce the corporate tax from 30 to 25 in one go, not over 5 years. And we're hoping that, they would see this STT or stock transaction tax in the same light. Instead of reducing it by 10 basis points a year, maybe they could, bring it down to 10 basis points in one go. Again, that's one of the things we're hoping for. We also want to push for an amendment of the REIT law. Under the present REIT law, only companies with leasing or rental income are qualified to offer REITs to the public. Okay, but this precludes other, other entities where, in other jurisdictions, they're able to offer REITs. For example, toll road networks, hospitals, logistics providers. No, so this is one of the things we want to push for to widen the market for REITs. And and so far I think we feel optimistic that the incoming Congress, especially under the leadership of Speaker Martin Romualdez in the House, will be very sympathetic, if not supportive, for these initiatives.
Okay, so again, PIFITA and of course amendments to the REITs there on the table. Sir, how is the market sentiment right now? Of course, you can see globally, it's not just the Philippines that's having issues domestically, but it's a global issue. But we do want to keep our foreign investors here, notwithstanding all of the issues in terms of the Fed and interest rates over in the US. What can be done to keep them here, to keep our local bourse attractive?
I think in my last 3 interviews with you, I've been pounding on the same theme. I think it's important, number one, to have more products.
Okay.
More products in the market, more liquidity in the market. And among the products, really, we need to have short selling. Okay?
Why is that, sir? Why? Why short selling to keep the foreign investors in?
Okay, because when the foreign investors feel that they have to exit or exit an emerging market or even the Philippine market, because we are a long-only market, they have no choice but to sell their shares. If we had short selling, they can keep their investments here and just hedge them.
Correct.
So there won't be that kind of foreign selling, okay? We will be able to retain their, I guess their investments here. That's why short selling, I think, is an important first step to bring back the foreign investors. As of May this year, we still had a net foreign selling of about 29 billion pesos, So it's not nothing to laugh about.
Correct. Sir, you mentioned increased liquidity and you are pushing to raise the minimum float. So first index stocks, let's focus on that, to 20%. You have 3 in the index, SMC, Emperador, ASEN, that are not in this threshold yet. What's the possibility that all the index stocks will be compliant, and how would this, as you mentioned, improve the investor sentiment, the foreign investors, from staying in the index stocks?
Okay. Well, number one, I mean, this change in policy in our index inclusion, I mean, increasing the float to 20% effective the review period of December 2022. We had published this, I think, more than a year ago, a year and a half ago, precisely to give any of the index stock components at this time to address this problem if they are below the 20%. As you mentioned, there are these 3 companies, and they probably are going to do something about it if they want to, remain in the index. They could do some private placements, do a follow-on offering. But again, I don't want to preempt them. It's their prerogative. So we just have to see what happens, in the next 6 months.
Sir, what about all the other listed companies raising it to 25% within 3 to 5 years? Is this feasible in these volatile times? And also, would this not sap liquidity from those that want to IPO, for example?
Okay, we were having, I was having discussions about this initiative to increase the public float of listed companies from the present 10% to 25%. Of course, all IPOs and backdoor listings starting in 2018 are already at the 20% public float. Increasing the others, from 10 to 25 was I think the time has come, to do that for, to improve the liquidity of the market. Except, as you said, at this point in time, well, number one, our plan got, our talks got shelved temporarily because of the pandemic. Two, at this point in time with the markets behaving, this way, it is something that, is not on the table. Okay? I think to be able to implement this, we have to have a very robust market, because to require these companies to increase their public float from 10 or anywhere below 25 to 25 will really, I guess, suck a lot of liquidity in the market, because they will have to raise funds in the market to be able to bring up their liquidity. So it's something that we have to, I guess, keep in mind, but it's something that we cannot do at the moment, I think.
Sir, what's the percentage of compliance with this 25%, just out of curiosity?
We probably just have about 40 to 45 companies that are at the 25% level.
Okay, so it might take some time. Sir, speaking of IPOs, some brave the volatility, others still waiting it out, but you do have 62 billion capital raised so far, another 36 billion in the offing. What is keeping investors still optimistic in equity raising right now? What's your target as well, sir?
Okay. I guess the silver lining in this cloud of high interest environment is really companies will find it very expensive to raise that capital for their expansion or working capital requirements. But they need to have this capital requirement. So I think they will be now forced to go to the equity market rather than the debt market. So in that sense, this high interest regime that we are going to be that we have now, and I think we will continue to see in the next year or two until the central banks are able to control inflation, will be favorable to the equities market in that sense.
Sir, you mentioned in an interview with a broadsheet, you are in talks with 2 fintech payment platforms for stock trading. Do you mean e-wallets? Can you give some more color on that?
Well,
and how will that increase retail participation?
I don't know if I'm... number one, we are in talks, but nothing definite yet, okay? So otherwise we would have had to make a disclosure of this. But we are having some exploratory talks with a payment platform company, one of the bigger ones, if not the biggest ones in the country, about how to get their subscribers, their tens of millions of subscribers, invested in the stock market, okay? So this is something that's not going to happen overnight, but we are working on this, to see how this could be made feasible, if at all. And one of the things we are addressing, if we are to be able to successfully get into this arrangement or agreement with the payment platform, is we must find a way to allow these small or retail investors to trade in fractional shares. Okay. So that's one of the things we're looking at. We're exploring how do we do this. In the US, investors can buy a fraction of an Amazon stock, because the Amazon, share price, I think in the thousands, okay? So that's something we're looking at to entice these retail subscribers of the payment platform to get invested in the, in the stock market. As you know, I mean, the e-sabong platform, or what I don't call it, e-sabong has been stopped by the president, so it's no longer on these payment platforms. So you have a lot of, I guess, liquidity, or that these retail investors will hopefully channel into the stock market.
And sir, speaking of that, how many more IPOs in the pipeline this year, apart from the ones that have already been announced? Okay,
we have the applications for the 36 billion of capital raising that you mentioned. We have had talks. We have not received an application for an IPO, a REIT IPO from the biggest, I guess, property development company in the country, which is SM Prime. We've had exploratory talks with them. I've had meetings with them. We are also pursuing a big IPO from the holding company of Mr. Ramon, Prime Infrastructure.
Okay.
And then we're also having exploratory talks. I mean, no final plans yet, about another 30 to 32 billion, stock rights offering by a telecom company. So we've got some big items in the pipeline.
Okay, so very interesting ones here, especially for the retail investors. Finally, sir, last question: crypto regulation and your thoughts on crypto trading. I think you were cited before that you cannot ignore this anymore. But now with what's happening, of course, with Bitcoin crashing, half of the value below its intrinsic value, Coinbase as well laying off employees, is this the right time to be venturing into what some consider to be a risky asset?
Well, like I've mentioned in my previous interviews, we cannot ignore the crypto market. A lot of the millennials are, very, I guess, active, into the crypto market. But I've always taken the position the PSE will not be a first mover in this market. In fact, even among the regional exchanges, only one exchange, which is, I believe, SGX, offers, I guess, digital or cryptocurrency trading, but only for institutionals, not even for retail. And as you know, we still don't have any regulations from our BSP and from SEC on crypto trading. So this will take time, and I'm glad we don't have it yet. Otherwise, that would have been part of our problem now, as far as the PSE is concerned.
All right, so a lot more things to be ironed out there, but a lot of big plans there for the boards. Thank you so much, Ramon Monzon, President of the Philippine Stock Exchange.
Thank you, Danie.
Now, pausing for a quick break, but coming right up after that, the common station for the Metro's train lines is expected to be completed this month. More of that and other stories when Business World Live returns. Stay with us. You're still watching Business World Live here on One News. I'm Danie Laurel. Now, travelers' fear of higher airfare as rising jet fuel prices drive up the fuel surcharge. Gerard de la Peña with this story.
Airlines are also feeling the pinch of soaring fuel prices. The increase prompted the Civil Aeronautics Board to raise the fuel surcharge level this month by 3 notches. From level 4 in May, the CAB implemented fuel surcharge level 7 this month. This means that carriers may add up to 768 pesos in their respective airfares, depending on the distance of the destination. Fuel surcharge for international flights also range from 1,000 pesos to nearly 10,000 pesos. This is bad news for several OFWs like Dema, whose round-trip fare from Rome to Manila reached around 58,000 pesos from the previous 36,000 pesos.
Yung ginawa namin sa agency na kinuha namin ng ticket, yung parang installment lang, parang ganun. Siyempre para sa amin mahirap din, kahit sabihin mo na OFW, siyempre mahirap rin maghanap ng pera.
Mara's family spent a few days in Boracay after scoring promo fares worth 1,900 pesos. But now that fares can be much more expensive, she's thinking twice of spending much more for the holidays. For its part, Cebu Pacific said it uses new engine option aircrafts which reportedly consumes 25% less fuel.
Kumbaga, mas maliit ang consumption mo ng aviation fuel kumpara noon. Malaking tulong siya lalo na ngayon na tumataas ang presyo ng crudo.
Other airlines, meanwhile, are still hoping to bounce back from losses they incurred due to the pandemic. According to some airlines, passengers can expect more seat sales to make traveling more affordable soon. For News 5, Gerard de la Peña, We Are One News.
Now, despite higher fuel costs, the Trade Department assures the public that prices of basic commodities will remain stable in the next few months. Speaking on One News' The Chiefs, Trade Assistant Secretary Ann Cabochan said prices of basic necessities like canned goods, soap, and bread will still be stable in the next 2 to 3 months. She explains that based on their computations, not all basic commodities will be affected by the fuel price hike.
I would not say that we would see significant increases in prices. We look at other inputs or raw materials such as the cost of packaging, tin if it's canned goods, or even other raw materials, not just oil. And our assessment as of this time, we can assure the consumers that we see that this will be stable at least for probably the next 2-3 months.
Still, Cabochan encourages customers to check out the agency's ePresyo app so they can monitor the prices of certain goods online before hitting the stores. The official said consumers can also use the app to lodge complaints on overpricing.
Yung consumer module, a consumer can complain using that app. Ngayon kasi tinitingnan lang niya presyo yung consumer. Di ba hindi siya pwedeng mag-key in ng anything.
Yes.
Now, yung eventually, pwede siyang mag-ano doon na ito yung presyo at this store. If there is any complaint, like mataas siya sa SRP, pwede siyang mag-complain using that app.
Now, the Transport Department expects to complete the Unified Grand Central Station or Common Station in North EDSA this month. The Common Station is touted to interconnect the LRT-1, the MRT-3, the MRT-7, and the Metro Manila Subway to give commuters an easier time transferring train lines. The construction of the project is reportedly being accelerated so that it will be complete before President Duterte leaves office. Now, despite the rising concerns on the country's debt, Senator Sonia Angara believes the Duterte administration practiced responsible borrowing during the pandemic. In an interview with the Chiefs, Angara, who heads the Senate Committee on Finance, said the outgoing administration did a fair job in trying to cope with the global health crisis without borrowing too much.
It's been a difficult 2 years, no? Amy, no? So ako naintindihan ko yung need to borrow. I think we still stayed on the side of responsible borrowing kasi I think we're talking about a 63% debt to GDP ratio, something like that, no? So I think that's still on the side of reasonable, no? It's a little bit over our predicted 60%, parang yun yung may informal or traditional rule yun. But in times of a pandemic, gumagalaw din naman yung goalposts or boundaries.
But Angara also pointed out the possible challenges that the incoming administration will have to face amid the ballooning national debt.
The challenge is, of course, how to meet any growing needs or growing spending, because traditionally the budget grows by a certain percentage every year. The challenge is to make revenues also grow proportionally so that you spend. And the second challenge is to spend in such a way that your spending is productive. Diba? You're spending on things which really benefit the people and which will pay dividends over the long term.
Now, the share of the tourism industry to the country's economic output inched up in 2021. PSA data showed that tourism's direct gross value added accounted for 5.2% of GDP in 2021. That's slightly higher than the revised 20-year low of 5.1% in 2020. This as domestic travel restrictions eased alongside the increase in COVID vaccination rates. And that's a first look into the business day. Today is Friday, June 17, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.